More and more South Africans are turning to credit in a bid to survive the country's tough economic environment. Those with repayments did get somewhat of a reprieve yesterday when the South African Reserve Bank decided to keep interest rates unchanged. But rates are still at a 14-year high, and South Africans are struggling to make ends meet. Annaline is the Chief Operating Officer at Debt Rescue, and she joins us now. Annaline, good morning. Thank you so much for your time. What is the current level of consumer debt in South Africa?
Well, the official figures are telling us that it's in the region of about 40% and probably higher of credit active consumers. We're obviously waiting for more updated data. But the reality is consumers are struggling immensely at the moment. They're having to incur debt to literally put food on the table.
Now, according to some data, South Africans need to spend more than 60% of their take-home pay to service their debt, placing them basically in a debt spiral. Is there any way out of this debt?
Well, obviously, the reality is this is most of this is beyond because of factors beyond the consumer's control, largely inflation and then obviously interest rates, and it's just placed a massive burden on them. But I think the first place to start for any consumer is to first, get your planning done, look at what realistically is going on in your financial circumstances. Be honest with yourself, do a proper analysis of what you need to spend on various factors every month. And make changes where you possibly still can. Perhaps you have some luxuries that can be cut down, etc. But we know that the vast majority of consumers have already done that a very long time ago. And then to seek help from a registered debt counselor to help them renegotiate their debt.
Let's talk a bit more about the trends you're seeing at Debt Rescue. Are you seeing more and more South Africans coming for advice, more South Africans asking for something like debt consolidation or other services?
Absolutely. We've seen a significant increase this year in the amount of consumers who are seeking help for their over-indebtedness. And largely the kind of trends we are seeing are there's two key factors coming through. On one side, we are literally seeing people going into that debt spiral where they are having to live on credit to put food on the table. And on the other side, we also are seeing that people are taking up more and more payday loans. Those are the loans that they take shortly after payday to literally see until the next quarter. So those are the biggest trends we are seeing, but definitely a significant increase in the number of consumers who are applying for debt.
Now, Annaline, we've heard from the Reserve Bank Governor that there are still many upside risks, including power cuts, climate-related issues, and geopolitical events. Now, this will have an impact on our inflation back home, and further rate hikes are not ruled out if inflation peaks again. What is your outlook for the rest of 2023, and if we look forward to 2024?
Well, realistically speaking, the Reserve Bank governor warned us about this at the last meeting as well. And the reality is, yes, we have seen some reductions in inflation, and it's starting to look a bit better. However, we know that the fuel price has gone up significantly, and we know that there's a knock-on effect of this onto other goods and because our stuff is sorted by road. So with the goods, perhaps some increase, but it's going to be a while before we start seeing decreases. What is of major concern is obviously that yesterday with the FEC meeting, 2 out of the 5 actually voted for an increase. So it does point to the fact that they are not comfortable yet at the levels that they are sitting at.
So still some tough times ahead. Thank you so much for your time, Annaline. That was Annaline, the Chief Operating Officer at Debt Rescue.